What's up? I'm Dan Fredenberg, and this is another chance encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Nick, and is it Shea or is it Shea?
Shea, like shea butter.
Shea, okay, awesome. And I got great news for you, Nick. Today I am joined with my very favorite audience member. And why is my favorite audience member here today? It's because this is a chance encounter where I interview commercial real estate syndicators. That means investors, buyers, sellers, that sort of thing. Now, why would I do such a silly thing? Well, part of it is because when you find out that if you want access to people's private deals, you need to have a documented prior substantive relationship, so that when the SEC checks out your business, you're all in the clear and they know how you're going about doing it. But before we get into those details about core competency, appetite for risk, things like that, Nick, do you want to say a thing or two about yourself?
Yeah, sure. So I come from an accounting background. I was working in finance at a company called Sonder. I don't know if you're familiar with them, but they do short-term rentals. And it's sort of like an arbitrage model where they'll lease out a whole multifamily property or a hotel. We're global across the world, and we'll give you fresh towel sheets, stuff like that, concierge on your phone. So we're able to break out kind of the hotel model across the whole city. And I was with them for about 5 years, helped them to implement tools like CoStar, built out lease accounting teams, stuff like that. And now I'm looking to transition to syndication. Started back in October. My wife and I attended a seminar for multifamily mindset. I don't know if you're familiar with them. So we've been doing that since October, and we're actually helping on a 506C right now down in San Antonio. It's a Class A 327 unit property. It's what's cool about this property is that it's 100% tax exempt, so we're able to get like way better returns. And it's in a Class A neighborhood, which is kind of unusual for these. It's a PCF. It's like public corporate facilities, which allows, I think it means the government owns the land underneath the property, which means if you have 50% of the units in it reserved for AMI, which is average median income tenants, then you get this tax exemption. And the cool thing about this property is it's in a Class A neighborhood, so the AMI is like much higher than it would be in normally these are in lower class neighborhoods. So not a lot of loss to lease, and it's able to deliver better returns that way. So that's a little bit about me.
Cool. Well, we can go on to the next segment, which is about the motivation. See, basically, a lot of the people in the audience, they have their virtual assistants to take care of all the information, but sometimes we have the actual syndicators or whatever. But the thing I always have to say is, but wait, check your 8. Nick, I don't know if you can see through the camera and down at like the 7 or 8 o'clock, but like in the user's device, there might be a hideous red subscribe button that they should probably get rid of because it's pretty ugly and you don't want. Okay, that's just a stupid joke I do at the beginning of all these, but I've interviewed a whole whack of commercial real estate syndicators, investors, and all that kind of stuff, and I found that when it really comes down to brass tacks, even though we have our own unique why, I can still put them into these 5 different categories that I like to go through in every single episode. Because after all, if you are going to be making a purchase of a multi-million-dollar commercial property and it's going to take months to happen, I need to know why somebody is actually going to follow through with it. And these are the 5 motivations. The first one is preservation of purchasing power. What's that all about? Well, if you already have a portfolio of assets and the way that you make ends meet is from the profits or proceeds of ownership, then the only reason you're going to make another acquisition is if either inflation is wearing away at the purchasing power of the cash flow, or if you're buying at a steep discount. So that's a popular reason, but that's not my situation. My situation is this one right here. I got a background in tech, and it hit me that I'm paying more in tax than anybody else. So how can I pivot and use my different skills and my skill set to be rewarded in the form of deployed capital, aka equity? So that's what I'm up to. But that's not for everybody. Some people, they are looking to take control of their schedule. They're looking to hustle less than they did before. And those ones, I say they're fast tracking retirement, but it really means that maybe they want to work fewer weeks per month or fewer months per year or something like that. But that's not everybody. Some people assume that that's everybody, especially if they're new to this industry. But there are people who just love the hustle. They are very ambitious. They want to buy their entire hometown. They're after that generational wealth to make sure that their great grandchildren never have to hold a day job. And that's why they're going to be hustling into their 90s. But the last group, they're still going to be hustling into their 90s as well, but their motivation's a little bit different. Maybe they've picked a sector of society, maybe it's the environment, maybe it's animals, who knows what it is. But the important thing is they've realized that you need a substantial financial backing if you're going to make a real big impact. And that is why they are making these acquisitions. So Nick, of those five, what combination of those describes you best?
Yeah, those are all great reasons to want to get into this. I think the ones that kind of stand out to me the most would be getting time back. So growing up, my dad was a really hard worker and kind of instilled that in me. If you work hard at a company for 40 years, then you'll be able to, make enough to support your family and put your kids through college. But kind of the trade-off with that was he traveled consistently for work every week, and maybe he'd be home on a weekend, maybe he wouldn't. And to this day, he still travels quite a bit for work. So my wife and I got married last June. We'd like to have kids in the near future, and I just want to be around more, I think. So that would be a big one. Some other ones, the company I was referencing earlier, Sonder, actually got laid off from them at the start of the month. So I guess financial stability and kind of owning your finances as far as, starting your own business and being more in control of your financial future would be another big one. And then the third piece would be giving back to our communities. So I've been in Big Brother, Big Sister for the last 6 years, helping with foster kids. We also volunteered at our church with the middle school kids. And we'd really like to be able to give back more to our church, our community, and at some point it'd be awesome to foster kids. So those are kind of the three main things that stood out to me.
I love that. That's fantastic. And the next question, though, and not to you struck an emotional chord, and I don't want to put that aside. But I guess it does still tie into the fact that this next question, the reason why I included it is many of you in the audience, you've probably seen a 506B questionnaire that you get before you're allowed to invest. And it's got a whole bunch of different questions. One of them is about risk. And I don't think it does a good job of really proving that you really get that, I like to say real estate is the world's second oldest profession. And so it's very competitive. It's been around for thousands of years. So you have to understand that, nature is involved, which means all sorts of risks are involved. So to assess that tolerance for risk, I like to ask this fill in the blank question for each of my guests. So there are many popular investment asset classes, but I think blank is too risky. Nick, that can be a real estate sector. It can be outside of real estate. What's too risky for you?
The first things that come to mind are pretty common, like penny stocks or, investing in B-class properties. But I think the one that really sticks out to me would be stocks. So the company I've been referencing on this call gave me a lot of equity in the company. And when I was let go, they canceled all of the unvested stocks. So, instead of giving us raises or bonuses, they gave us equity. And by letting me go, I lost a significant portion of that. And then over the last 5+ years, I've been investing in the stock market. And as I'm sure you're aware, it hasn't been doing very good. So I'm down quite a bit there as well. So just from personal experience, I would say stocks haven't been treating me very well. But that's just my perspective.
I get it. I get it. And, you know, businesses are so multifaceted, and like, you know, the way that they generate revenue is super complex. And it also bugs me about how they always have a some sort of like a PR department at these bigger companies, which means that's a department that's specifically for spinning what's ever going on to the public in a way that will make them feel positive about it. And that's why I like investing in commercial real estate properties, is because you don't have a PR department. You know, you don't have people to spin what's going on. So you have a better idea what the health is. So that's fantastic. Now, for the next segment, before that, I get another way to man, that thing just kills me. Anyway, so it's a not so subtle hint there, but in this next section, I think it's what most people watch this or remember from these chance encounters, which is the segment with the Dan Does Deals Commercial Competency Cube. And it has the 6 different roles in a commercial deal. The reason I go through it in every episode is because I want to make sure that you, in the camera there, can effectively communicate on the subject of commercial real estate. And on top of that, you'll also learn how my guest fits into these deals. And if you want your own copy of the Dan Does Deals Core Competency Cube, you can go to dandoesdeals.com. And like a complete dummy, I didn't even ask for your email address. And the reason for that is because I want to have 0 barriers between you being able to print this out, and then you can practice on your family and your friends and all that kind of stuff and get really good at understanding who is taking care of each role in these deals, because it's important. So to start off though, let's talk about repositioners. Repositioners look at a bunch of different properties and they do a bunch of paperwork. What is this paperwork, you might ask? Well, there's a fancy word for it. It's called underwriting, and it means they're doing the math. They're doing the arithmetic. They're figuring out, first of all, is this property even making the amount of money that the seller or the broker is claiming it is? Because there are ways to cook the books. So the repositioner has to not only keep a lookout for that, they also have to figure out how can they get more upside. Once again, commercial real estate, you know, real estate in general, it's a very old and mature industry, so it's super duper competitive. So one of the ways that a repositioner can find upside very, very easily, and a lot of the reason why we're on the internet, is because they need better financier relations. Financiers are people who only deal in money and paper, okay? So they are not involved in the work in any ways. And every repositioner needs to have some investor relations roles. But the main thing is that if the repositioner can secure a cheaper loan, that goes straight to the bottom line. Okay, so that's why every repositioner is involved in financier relations. But usually the repositioner is going to have the same loans available to them as anybody else. So the first place they're going to look is the operations team. They're going to stop those Benjamins from going down the toilet there. But of course, there's more to operations than just unclogging toilets and collecting rents and mowing lawns and fun stuff like that. One of the things that I contribute on my GP teams is I've got this marketing background and all this technology with web apps. I can custom code these things to automate different parts of the business. And then with the marketing side, if there's a vacancy rate problem, even if you are in the 100+ units apartment complex deals like myself, sometimes the third party management will have a vacancy issue and you need to step in and figure out how to fill those units. So that's what I'm doing. But often the repositioner won't be able to find enough upside just by stricter expense control and operations. So they need a contractor team to do a value add. In other words, they do renovations on the units. And the reason for that is because the next resident would be happy to pay more in rent than the previous one because the unit will be actually nicer. Now, it's not quite that simple though, because you can spend all the money in the world on contractors and, you know, gold plating toilets and stuff like that. But you're also going to have to keep close eye on them, make sure they're not cutting corners and things like that. So one thing I run into, especially because, see, I don't know if you know this about me, but I'm from the internet. So that means I need locals. I need boots on the ground, people who can be there in an hour or two, because that's not going to be me. I'd still be stuck at an airport in an hour or two. So we need somebody who lives nearby. Okay. Now, once the repositioner gets this team assembled and they have the property in mind, they turn around to the financier. They say, hey, this property I'm taking over, it's 350 units and it's tens of millions of dollars. You don't happen to have, say, tens of millions of dollars you Len does. Do you? And one question that's going to be on the financier's mind at this point, though, is who is the sponsor KP? What's that all about? Well, let's say that you are a physician or something and you have a network of close pals. You want to put some money together and take over a commercial property. The thing that's going to take the wind out of your sails is that if you want to be eligible for a commercial loan, somebody in the fold has to already own a similar asset. So you want that 350 unit apartment complex, you need somebody who already owns a 350 unit apartment complex. On top of that, you need a balance sheet of at least the amount of the loan, and then you need a certain amount of liquidity. But if you have all those pieces of the puzzle, you got yourself a commercial real estate deal. So Nick, as far as those 6 different roles, where do you see yourself most likely contributing?
Yeah, that's a great question. So pretty early in our syndication career. So obviously some of those we're not going to be able to help out with, as far as we're not able to sponsor deals yet. We do find a lot of interest. So a little more context on my business partner, which is my wife. She is in medical sales and talks with C-level suite executives every week at hospitals, trying to sell them staff and products and stuff like that. So she is going to be managing our investor relations. What does that mean? That means she's going to help to find potential investors on various types of deals that fit our criteria. And that criteria is going to range from 506B or C, depending on who finds the deal. Myself, I have an accounting background, so the underwriting portion that you were talking about really speaks to me the most. Pretty proficient in sheets, and I've been doing spending a lot of my time talking to brokers in our target markets. And that's kind of the hard part, I guess, is finding a good deal, especially right now. Inventory is really tight. So you'll constantly hear about people finding off-market deals, and that's really difficult unless you build those relationships with these brokers, which is something I'm learning right now how to do, try to become more proficient at. But those are kind of the 2 main things we're going to look to help on these deals.
Beautiful, beautiful. So the next question, and you were alluding to some of it, it has to do with the buy box. And when syndicators or investors in commercial real estate are talking to each other, they say, what's your ideal property? What's your buy box? They're talking about 3 main things. First one's geography. Where is it? Which states? Which counties? Possibly even which neighborhoods, okay? It's all going to matter. Second one's going to be size. We mostly talk about multifamily on this show. So that means that the unit count is going to be the most common way that people define size. And that's because you're going to have a different type of group taking over a 15 unit apartment complex compared to the ones that are taking over the 150 unit apartment complexes and so on. So that's the second one. All right, it's the size. There are other kinds of commercial real estate that go by square footage, like warehousing. But anyway, the third one, it's called class. And I separate class into 2 different things. The first one is called condition. So that's like, how old is the building? Okay. What kind of shape is it in? Is it also, does it have like a bunch of luxuries and amenities, or is it totally no frills, bare bones, nothing exciting sort of thing? So that's the first meaning of class, which is condition. The second meaning of class is the area that the property is located in. And that's specifically important for what's the crime rate like where the property is located. What are the school districts like where the property is located? And then, of course, the amount of traffic. If it's busy, it's going to be worth more. But both of those 2 meanings of class are rated with the same system as in grade school, where you got A+ at the top, and then A, and then A- and B+, and so on. But Nick, I get that you're new to the game. You mentioned, some of the things that you've got in the chamber right now. But what exactly is easier for you and your organization to say yes to, and what's more difficult to say no to?
Yeah. So our target criteria for a deal would fall into the classic value add. So, B-, C+ type asset in a B or higher neighborhood. We're also looking at things like path of progression. So when you get into that specific neighborhood, are they building, desirable restaurants or grocery stores? Is there a Whole Foods or Chick-fil-A or something like that around? Or is it in a pocket that looks like it's not really going to improve? Those are things we kind of look at. As far as unit counts, we're looking at anything from 30+. So like I mentioned at the start of the call, we're helping on a deal that's 300 and 27 units, which is not really our forte, but we're partnering on it with some pretty big partners that do this type of stuff consistently. So as long as you have the right partners on a deal, I think you can probably handle just about anything as long as you're not selling yourself, beyond your capabilities. That's a big thing. Like if you're going in on a deal and you think you can raise a certain amount, it's always good to maybe step back and see, is that realistic? Because you don't want to overcommit yourself.
Yeah.
And yeah, go ahead.
It's a tough thing to guess for sure. But you were about to say?
I was just going to go over some other criteria. So when I do the underwriting, I'm definitely looking at things like cash flow right now. A lot of people are really interested as far as potential investors. What's the distribution going to look like each quarter or monthly, depending on the deal? So we're obviously trying to get something higher than 7%, which is definitely hard to find. And usually it's kind of a trade-off. Are you going to get more equity through appreciation in the value adds, or are you able to get more cash flow? So right now we're targeting more cash flow than the equity. But those are just two things to kind of look at.
All right, excellent. And the other thing I wanted to say, and it was a great segue from what you were saying about being multifaceted. The fact is, like, all of us have our own unique skill sets, but because the business is multifaceted, I love how people are so eager to help build teams, connect, make referrals, all that sort of stuff. But at the same time, we all have our own unique skill sets that makes us better suited to help some more than others. Me personally, because of marketing and the automation, the sponsor KPs are the ones that I usually need to meet more of. And then the other one is locals. Because I'm the guy from the internet. But Nick, you mentioned, your underwriting. So it sounds like you need locals, you need sponsors. As far as 506B rules go, make sure you don't entice investors. So if you have any delicious pastries or something like that, don't waggle a donut in front of the camera. Because I don't know what the SEC would think about that. And so, but you could say beginners as well. But who are you best suited to help?
So that's a great question. So most of my immediate network would fall into the 506B. And you'll find that if you're trying to raise for 506C, it takes a lot more work. Unless your network's already built out with a lot of accredited investors. I'm able to find a pretty good portion of accredited investors through secondary network connections. So like someone I know has a pretty good network of accredited investors, and I just try and leverage people like that. But yeah, kind of both, I guess. The deal we're raising for right now is the C, which is why I was able to talk about it at the beginning. And that's kind of what we're focusing on right now, is how do we grow that accredited investor network right now.
Beautiful, beautiful. And then the next thing is how to reach out. So me, I got this distinct last name, and LinkedIn's the best place to find me. So this is a really easy way. But if you scan this code right here with your phone, that sends you to the FAQs page of 506BME, which is the platform where I offer the IT services to syndicators to help you document your substantive relations, making sure that you can prove that the people you're working with, the different investors, they actually knew your level of sophistication, appetite for risk, and vice versa. So that's what I'm up to. Nick, what are the best ways to reach out to you? Is it through a social media platform or website?
Yeah. We're on LinkedIn and we're on Instagram. We're not on Facebook, but we should be. And my company is called Vichy Capital. That's VICHY capital.com. And you can shoot me an email at nick@vichycapital.com. And yeah, feel free to check out our website and reach out if you have any questions.
All right, beautiful. And then the last thing, it's actually not for you, Nick, it's for you in the camera. It's a public service announcement, which is, if you've been watching this episode and you've been experiencing searing pains in your eyeballs and like migraine-like symptoms, it's probably the downright hideous subscribe button down there. And if you want to get rid of it, you just click on it. It's free. It doesn't cost you anything. You don't have to put in credit cards or anything like that. And the reason why I'm so persistent about it is because if enough people click on it, then YouTube might actually start paying for these videos instead of me. And that'd be amazing. And as far as you're concerned, the only trade-off is my videos might show up on your list of suggestions sometimes, but you can feel free to ignore those. I just appreciate the fact that you spent this time with me. Just like Nick, I appreciate you joining me today. It's been great getting to know you a little bit better.
Yeah, likewise. Thanks for having me on.
Awesome. Thanks.
Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.